3 weeks ago I talked about what are the best currencies in the world, and you can check out this video here and here. I mentioned the Indian Rupee as one of the key currencies, and namaste to our friends in India. And you might have been surprised by that because recently the Indian Rupee has reached actually its lowest point on the exchange rate against the US dollar at about 80 rupees to the dollar. So I wanted to see if the Indian Rupee is better than the US dollar, or if the US dollar is better than the Rupee, and do the math about it. So I decided to come back all the way to 1st of January 2000 and compare for the past 21 years how has been the performance from an investment perspective between the two currencies. US dollar, Indian Rupee. Who is the winner of the boxing match? Let's find out. My name is Greg Angelben. I'm a life and personal finance coach. I share what I know about personal finance and coaching on a cup of coffee to help you live a life of purpose and building up your wealth. Round one, pure cash. For the most risk-averse people out there, there's nothing better than cash. Whether you have it on your bank account or whether you stuff it under your mattress, people consider that it's the safest asset. That might not be quite true, but that's for another video and another time. So let's imagine we're the 1st of January 2000. The world has not ended, the Y2K bug has not destroyed all computers, and we have 10,000 US dollar in cash in our hands. So we decide to keep this cash for the next 20 years in rupees or in US dollar. And on this graph you can see the evolution of the Indian Rupee versus the US dollar in terms of exchange rate from the 1st of January 2000 to the 31st of December 2021. So that's 21 years. It is not a pretty picture for the rupee. 10,000 US dollar in 2000 was converted to 456,844 rupees, or more correctly, 4,56,844 rupees. Is that right? I hope so. Then on January 1st, 2022, we converted back into US dollar to compare with the original investment of 10,000 US dollar, and we get 6,131 US dollar. Oh dear. The US dollar definitely wins this round. We're purely looking at an investment view here, which means that we're not looking at inflation, for instance. It's very hard to compare how the inflation has been happening in India versus the US, because those are two very different economies. The US is a rich economy, developed economy, and India is very much a developing economy. And the baskets of goods which are used in each country to determine what inflation is are very, very different. So here we take the perspective of an investor, a neutral investor, who's spending the money wherever in the world and does not have an attachment of where they're spending the money in the US or India. Round two, sovereign bonds. Okay, so cash is not really king. That's not really the best way to be keeping your money for 20 years at a time. So if we take a conservative view, we could actually invest in US or Indian treasury bonds. So what we do here is we look at the US treasuries, the 10-year treasuries, and the Indian 10-year treasuries. Then we see what happens to our $10,000 or our 4,56,000 rupees. We assume here buying and selling the sovereign bonds every year, so the 10-year sovereign bonds every year. So we're going to ride the up and down of the rates over the 21 years. The bonds for the US are from the Federal Reserve, and the bonds from India are from the Reserve Bank of India. Our 10,000 US dollar invested in bonds in the US would become 19,908 US dollar by January 1st, 2022. Which is almost doubling our investment amount and is a 3.3% yearly increase over the period. If we look at our 4,56,000 rupees in sovereign bonds in India, they would have become 22,68,000 rupees, which is about 5-time increase, or 7.9% nominal return per year, which is not bad at all. So we need to compare it to its dollar equivalent. So we use the exchange rate of January 1st, 2022, which is 74.5 rupees to the dollar. We then get 30,439 US dollar, which compared to the 10,000 invested originally gives us a 5.4 annual return over the period. So 5.4% for the sovereign bond in India versus 3.3% for the US bond, then the rupee is a winner. Does this video resonate with you so far, so you know what to do? And don't forget to put the notifications on and subscribe to the channel if you want to hear more content like this. Also, don't forget to check out in the video description, there are other YouTuber videos which are about the same topics and that might interest you. Round 3, stock market. An investor who wants to have decent return on investment would not just stick with sovereign bonds or cash. We would actually go into the stock market to seek better returns. And to do that, we do not have to take a lot of risk. We can look at the biggest company on the New York Stock Exchange and on the National Stock Exchange of India. And there are equivalents between the two stock markets. In the US, we can use the Dow Jones Industrial Average Index for the top 30 companies on the US stock market. For India, we can take the Nifty 50. I love that name. And that will cover the top 50 companies on the Indian Stock Exchange market by market capitalization. $10,000 invested on January 1st, 2000 on the Dow Jones Industrial Average, rebalanced continuously to follow it until January 1st, 2022, would have increased to $32,112, which is more than tripling and an annual return of 5.7%. Not bad. Or 4,56,000 rupees invested over the same period in the Nifty 50 and rebalanced continuously would have increased to 51,23,000 rupees, which is more than 10 times our original amount, or 12.2% annual return. Now we're talking. But hold on, we still need to exchange into US dollar to see how it compares to the original $10,000. We get $68,757 US for 51 lakhs, which gives us a net annual return of 9.6% based on $10,000 US invested. A very clear winner is a rupee. And the winner is, let's look at the summary here. Round 1, staying in cash, goes to the US dollar due to the worsening exchange rate for the rupee. Round 2, investment with sovereign bonds of the respective countries go to the rupee. Round 3, investment in core companies of both the US or India goes to investment in rupee too. Except if you only believe in cash, investing in rupee in India would have been the better bet than the US dollar. So as an investor, the strongest currency is a rupee. How about the future, you might ask? It depends on two dimensions. On one side, you have the return of investment that you can get from bonds or the stocks, and on the other side is the evolution, the future evolution of the exchange rate between the US dollar and Indian rupee. From a return on investment that you can expect on bonds or stocks in India, it's not going to be as hot, I would say, than the last 20 years. But considering the fundamentals of the demographics and also in the Indian economy perspective, I think we can fairly say that there will be a positive differential between the returns that you can expect from bonds and from the stock market in India versus the US. For the exchange rate, there's been some recent news from the Reserve Bank of India that they're pushing for actually doing trade, bilateral trade between countries using rupee instead of the US dollar. This is just beginning, but if you take a 20-year perspective, I think there's going to be a very large impact on the strength of the rupee versus the US dollar. So we will see progressively, I think, whether stability or an improvement for the rupee in terms of strength against the US dollar. So what we saw in the past 20 years of progressive weakening of the exchange rate between the US dollar and the rupee, with the rupee becoming weaker, I don't think that's going to happen in the next 20 years. All in all, and if I had $10,000 to do, and that's not financial advice, I would bet those $10,000 on investing in India, in Indian rupee. And I'm off just doing that. I hope this short comparison between the US dollar and the rupee as currencies has proven useful to you, and I look forward to seeing you next week for more personal finance and coaching on a cup of coffee.